let's move on and address the mega corporate news that we got over the weekend, which is a huge merger between several Gujarat state entities in the oil and gas arena. Now, this is a large exercise. Gujarat State Petroleum Corporation, Gujarat State Petronet and GSPC Energy will all merge into Gujarat Gas. Gujarat Gas's transmission business will then be carved out and it will be listed as a separate entity as GSPL Transmission. We should just look at the stock price movement as well. Let's pull up the GSPL, maybe a 6-month or a 1-year chart, and that will tell us. I mean, the market was sensing this, and Nimesh was also sort of alerting us on this as well, because the stock moved from about 320 on the 15th of August, surged all the way to 430 in just about, a couple of trading sessions here. That's the sharp increase that we've seen in GSPL. So while, the market argues that maybe a lot of this is already played out on the GSPL stock, is there more legroom ahead for Gujarat Gas, which is not rallied, nothing similar to what we've seen on GSPL? To talk about this, we have with us Probal Sen, energy analyst at ICICI Securities. Probal, great to have you on. And, I was just trying to go through the details of your note. And the one headline that really, struck me, that for Gujarat Gas, once this demerger is done and then the demerger is done, you're expecting the EPS to move from around 21.5 rupees per share to almost 38 rupees per share. So take us, into the whole behind the scenes. What do you make of the transaction and why you expect this kind of an upside on Gujarat Gas?
So very simply put, there are two elements to it. One is that the gas trading business, obviously, which adds about 1,000 crores of EBITDA. Now, there are two ways to look at it. 330 odd crores, as per the management estimates, comes from the sourcing that Gujarat Gas itself used to do from GSPC. But the fact is that that margin will be added to somewhere. It will not disappear, even if the entity is the same. So the aggregate EBITDA accretion that can happen to Gujarat Gas's business will still be in the range of 1,000 to 1,100 crores. And this is not even factoring in the kind of, around 9 to 10% growth in trading volumes that was guided to by the management. So that's on the EBITDA line. More importantly, since there is a 72 billion, tax loss that will be transferred to the resulting entity, that itself ensures that there will be literally no tax liability on the resultant entity for at least the next 2 to 3 years, depending on the actual PBT level. So, those two factors actually combine to deliver the huge outsized EPS benefit. It's certainly not something that is happening just because of operational synergies. The use of the tax loss is a major factor as well in terms of, the EPS accretion that is coming in.
All right, Probal. So you're positive on Gujarat Gas and you've explained that quite well. Let's talk about GSPL. Buy the rumor, sell the news. That appears to be taking place right now. After running up 25% in a matter, I think, of 6-7 trading sessions, now the stock is down close to 4%. What's the view at around this 425 rupees?
No, I think frankly, it's very simplistic. There is a swap ratio that has been decided. It's a matter of 6 to 9 months till which the company is essentially a separate listed entity. And the swap ratio clearly indicates a fair value of 465 odd rupees a share, which is pretty much what the market had already priced in close to it, even before the news actually officially came out. So people will make their individual profit booking decisions based on, what their entry level was. But the fair value, I think, gets fixed at somewhere around 465 levels. It's as simple as that.
And you do have a buy. I think the earlier rating was a sell. You've gone to a buy on Gujarat Gas for the reasons that you mentioned, with the target price at about 750.55. So that still implies a fair amount of upside. Probal, what about this new entity that will list, the transmission entity that will hold all the transmission assets? So how do we wrap our heads around this in terms of valuation, the potential value unlocking?
I think the details around that will probably become clearer when we have more details in terms of the carve-out arrangement, in terms of the scheme of arrangement that comes out. Right now, we just have a bare-bones swap arrangements and not much clarity in terms of what that business will look like. But the concerns around the new transmission entity will remain the same as they were for GSPL. Basically, what happens to the tariff? The management in the call yesterday did highlight that they expect a successful resolution in terms of the review that they've asked for in terms of their tariff. Plus, they also expect additional capex to be essentially approved, which automatically means that the tariff will be revised upwards. But until actually we have some clarity on what is happening to the tariff going forward from a sustainable perspective, I think that the pure play transmission business of Gujarat as it stands now will continue to remain under pressure. So I think we'll wait for clarity to emerge before commenting on the new entity.
Okay, so we've discussed both those two. Probal, I wanted your view on GAIL. Now, since the trading business is getting demerged from Gujarat Gas for regulatory reasons, will GAIL have to do the same with regard to demerging its trading business? Do you believe that that is the possibility and that's the way ahead?
I honestly don't know if the trading business is, getting merged or demerged due to regulatory reasons. I'll have to check whether there is a regulatory requirement. As of now, my understanding is that there's no regulatory requirement as of today to basically separate out the trading business. Yes, there has been news around the independent transport operator, if that is what you're referring to basically sort of streamline the way capacity is booked on gas transmission pipelines nationwide. But I'm not too sure whether that translates into the trading business being mandatorily separated from GAIL's core business. So I think I'll refrain from commenting as of now because the regulatory picture is not very clear.
All right. Probal, hi. Morning. Just a quick word. Oil is down to, as we're bouncing around, we're back down to about 77, under 77 now. Any tactical or otherwise trades here across the universe, the oil and gas universe?
I'll refrain from any tactical recommendations. That's not really my job. But in terms of crude softness, there are two major impacts that one sees. One is that GRMs, which had actually been recovering quite smartly in the first couple of months, they seem to have now started to reflect the weakness in crude prices, because this current weakness does seem to be a little bit demand related, and that is starting to reflect again in a reversal of the GRM improvement. So that obviously hurts Indian refiners. But on the flip side, the kind of reduction one is seeing in crude and product prices means that marketing margins have once again expanded quite sharply to about 7-8 rupees per litre. So on balance, I think the OMC's earnings on an integrated basis are perhaps holding on in the levels that which the street is building in, probably still a bit higher to that extent. And as far as upstream is concerned, till crude still holds above $75, their net realizations actually don't get hurt as much. So we'll have to keep a keen eye on where Brent goes from here. I still believe that there is always an overreaction on both sides as far as crude is concerned. And therefore today, I think inventory being at 5-year, less than 5-year average across categories in the US, and the potential of China coming back to the market is being completely discounted because of fears around economic hard landing, or basically China's demand just not coming back at all. But I do think that there is a little bit more of tightness than what that one should expect in the next half.
Sure.
And crude prices should bounce back to around $80 levels. That's my sense.
Sure, Probal, just, as we sign out of the conversation, just a quick question. Because we were looking at GAIL and the new Gujarat Gas, and people will look at these two entities. Just wanted to know, at that 755 rupees target that you've ascribed to Gujarat Gas, what's the valuation multiple you've given to Gujarat Gas, and what's the multiple you ascribe to GAIL? And maybe just a word on this, LPG price increase as well, right? Pretty steep on commercial LPG cylinders, 39 rupees. If there's any, bearing on the stocks on the marketing side.
Okay, so I think three questions. One, GAIL's multiple, I would still say, is not really comparable to Gujarat Gas, because even in the resulting entity, 70% of the business will be a pure play CGD business, which is completely the opposite of what GAIL's business is in terms of transmission and trading. Having said that, the target multiple we have put is about 27 times FY26 earnings of standalone Gujarat Gas, because we frankly don't have enough info to put out in detailed consolidated estimates. But if you look at our note, the pro forma earnings that we have pulled out suggest that earnings can grow to 37.8, which you mentioned earlier in the conversation. And the derived multiple, therefore, on that number is about 20x, which is comparable to the nearest peer IGL, which we believe is a fair way to look at the company at this point of time.
Well, we'll leave it there. Thank you very much for your time. Good speaking with you. Appreciate it. Sudarshan and